This time last year, Ethiopia's Prime Minister announced that the country would be gradually opening up a range of sectors. Telecommunications, energy, aviation, all of them will be open to foreign capital to some extent. What was conspicuously absent from that entire reform and opening up conversation was whether or not Ethiopia would open up its financial sector to the rest of the world. Now, on paper, Ethiopia is a fascinating market. Last year, for instance, if you look at these numbers, the average non-performing loans were well under the 5% ceiling. Capital to risk-weighted asset ratios, they've actually gone up by over 900 basis points between the end of June 2012 and the end of June 2018. Returns on equity, that had fallen from over 55% to just over 20% over the exact same time frame. Now, this is a country, remember, that has 18 banks, but the ones to keep an eye on are just these two, the Commercial Bank of Ethiopia and the Development Bank of Ethiopia. Now, the country's central bank has asked the top one, the Commercial Bank of Ethiopia, the largest in the country, to review the quality of assets on its books, as its income may be affected by, and I'm quoting here, the phasing out of implicit subsidies, restrictions on competition and other distortions in the market. Not my words, but those of the IMF. Now, the Development Bank of Ethiopia is not a deposit-taking institution, but it had an eye-watering non-performing loan ratio, 39% by the end of June. As the IMF put it, it poses substantial quasi-fiscal risks, particularly because the central bank's lending to it is equal to over 2.4% of GDP. But let's put that aside for the moment. Here's the scale of the opportunity. By the end of 2017, over 1 in 3 Ethiopian adults had a bank account, just over a quarter saved in a financial institution. But these are much, much lower than the averages in East Africa. The percentage of adults with a bank account in Kenya, for instance, it's over 80%. Also, barely 0.3% of Ethiopians over the age of 15 have mobile money accounts by the end of 2017, and that's despite there being over 34 million mobile subscriptions in the country at that time. So on paper, the upside potential here is enormous. But here's the thing, in the last 12 months, has this perception towards fast-paced economic reform really changed in Ethiopia? I discussed that earlier on with Zemedeneh Negatu. He's a chairman of the Fairfax Africa Fund.
Privatization or liberalization, any part of the world, I mean, in the countries that I worked in around the world, it always elicits one emotional reaction, but also an intellectual debate, as in why are we doing this? And I think you raised a very good point. As you know, over the last 12 years or so, Ethiopia has been the fastest growing economy in Africa and amongst the fastest in the world. And that has actually delivered a lot of results. But look at it, Ramah. We were an $8 billion GDP economy in 2000, the year 2000. Today, it's more than 85 billion. So it's grown by more than 10x. By this time next year, in the next 24 months, it will top $100 billion. That means it's become a very substantial economy. That means, like China has done, what South Korea, the Asian tigers have gone through the same process of starting to reassess what the model that got them to the certain stage and evolve and change and adapt. Keep what worked well, but evolve. And I think that's where this liberalization concept comes into play.
Right. So away from the telecommunications sector, because that's gotten a lot of attention at this point in time, but there's a whole range of other sectors that are also considered for liberalization, at least not now, but in the future. Energy for one, transportation with Ethiopian Airlines. Then, of course, there's a banking sector as well. But Ethiopia's banking sector is interesting because you've got 18 banks, but at least 60% of deposits and loans are just held by 2 entities, Commercial Bank of Ethiopia, Development Bank of Ethiopia. And the opportunity for me seems to be on the private side with the other 16 or so banks maybe consolidating and bringing in outside equity in order to bulk up before you've got foreign companies knocking down the door with the KCBs and the equities coming into Ethiopia and saying, hello, we're all here.
Well, you're absolutely right. And I've been promoting exactly this notion about consolidation as part of the liberalization and introduction of foreign competition into the marketplace. Because as you said, there are 16 private banks and one humongous state-owned bank called the Commercial Bank of Ethiopia, whose asset is bigger than the 5 Kenyan banks combined. So we need to find the right balance where the private banks can also be very strong, very dominant. Today, they are large in numbers, but not in large in balance sheet. There are 4 or 5 sizable ones. But so what I've been promoting, like you just mentioned, is create consolidation, give them size, give them the balance sheet that they need to be effective competitors, and then maybe open it up fully. At the moment, foreign banks are allowed as to open rep offices, which is an entry point. In fact, Equity Bank, I understand, opened a rep office here in Ethiopia last week. Okay, and I know KCB is next, and there are quite a few. I think that should be the initial entry point. But from a local market perspective, let's strengthen them, let's make them efficient, let's make them competitive, so that when it opens, they're on an equal footing or better to compete with international banks.
How receptive
my other
are
suggestion
the local
is
banks
that
to that
opens
idea?
up to international banks. Well, actually, there's a split thinking on this one. The bigger ones, the top 3 or 4 or 5, are actually very eager to do the M&A deals, okay, to merge with others and bulk up in their balance sheet. The smaller ones, and I do understand, I mean, the small ones are a little worried, right, because they might be swallowed by a bigger bank. So I think some form of comfort building exercise is needed. I'd rather these banks do it on their own terms. They look for their own partners where the chemistry is there and all that. But ultimately, my honest opinion, my solid promotion of this idea of consolidation, it needs to happen before opening up the market. When it opens also, the second point I want to make is when it opens, I'd rather it be a requirement for JV with international banks. I think that would probably foment more competition, strengthen knowledge transfer, know-how transfer at a much faster pace if the international banks, whether the Kenyan banks, the South African banks, the global banks, if they are required to do a joint venture as opposed to setting up their own little shop in Ethiopia. But there's a lot of exciting things coming up in the financial service market. As I mentioned to you last time, hopefully this time next year or towards the back end of 2020, we'll have stock market in Ethiopia. So capital markets introduction also will give a huge boost to the economy.